Welcome to my YouTube channel. This time we're gonna do the episode 5, reading the databank results. So last time we developed these 14 strategies using the builder, and this time we are gonna choose a couple of them or some of them. So the first thing that we need to do is to copy these strategies and paste them in the retester. And in the retester, we are gonna select some of them. As you see the data in this time, I'm gonna set up the day end of April from, let's say, remember when we built the strategy, it was data from 2010 until the end of 2023. So this time we are gonna use the end of sample, end of 2023, 31 of December or 1st of January of 2024. Okay, and in trading options, we use the same. In ATM, this is something we don't use. In money management, we are gonna put an account of 5,000. This time we are gonna test fixed size 0.2, let's say. And in cross checks, we are gonna activate these 3 tests. In my private course, I show all the tests that I use, but also in the link below, you will see that I'm giving away, if you leave your email, a PDF with 6 tests that every strategy must have. So for Monte Carlo trades manipulation, we do 2 tests with 1000 simulation each. Here you can see randomize the trades order, and also I skip the 10% of the trades to see the results shouldn't be so much different. So the return drawdown with a level of confidence of 100% should be greater or equal than 0. The net profit should be greater or equal than 50% of the Monte Carlo trades of the 50% of confidence, and the other one 95% of the drawdown should be less or equal than 250% of the down of the Monte Carlo trades. This reasoning, I explain it in my private mentoring. For higher backtest precision, this is very simple. I'm doing in slow test that the net profit should of out of sample should be greater or equal than 0. The same return drawdown can be equal or greater than 0. Save the backtest. As we have 2 providers for the data, outcut of Duca's copy and outcut of the proper broker, in this case Darwinix, we choose the same dates, and then the market 2 shouldn't be more than 70% of the net profit of the market 1, and the market 2 in number of trades shouldn't be more than 90% of the market 1. That's what I think. These are my basic 3 tests, and so let's start with that. I will test all of them, so let's wait for that. Meanwhile, I will show you what are red flags that kill strategies. So sometimes we find amazing strategies in sample, but out of sample we lose money. So that's what I don't like. That's why I check that out of sample should be greater than 0, that the net profit. I don't like strategies with less than 200 trades in sample, because statistically it's not significant. You need to check as well in 1 year 200 trades is a lot. So that's why I choose a lot of years from 2010 until 2023. A profit factor above 3 is too good to be true. If it's a equity curve perfect, it's not real edge. I don't think so. The win rate above 80% is with tiny profits is too fragile for slippage. And sometimes you test one massive trades or 2 or 3 that makes all the money all the profit in the strategy, that's not also good. So let's go. So you see 8 failed and only 6 passed. So if you select this failed and you delete them, and here you can see how it failed. It says that 6 failed because of the higher backtest precision. They lose money in the out of sample, and the additional markets also is not good. It means that the data is not correct for that two strategies. So what I do is delete them, and we want to stay with 6. If those were my proper strategies to pass them, normally what I do in the builder is to leave this to run the whole night or a couple of nights, and it stops when this come into 1000. So instead of 14, we will see 1000. I do first this test that you saw. Normally I discard the 60% or 50% of the strategy, so I will stay with 400, let's say, and after that I apply the other robust test, the Monte Carlo retest methods, sequential optimization, and optimization profile, and sister parameter permutation. And then once after I apply those tests, which takes most of the time, could be, depends on how many strategies, but it could be 2-3 days. After that I will stay with 20, and then with 20 I do this, what I'm gonna show you now. So first I'm gonna see that these strategies are not correlated, so I will merge the strategies. I measure all of them in a portfolio, and in a portfolio what I do is compute a correlation test, and I see that all of them are not correlated. So now that I did this test, I delete that, knowing that all of them are not correlated, and then I will order by profit factor, right? So I can see that 1.53 and 1.52. Normally I do like the ones that has less complexity. It means that we have less parameters. Let's pick up this one, the ATR. If you go to tools and then edit this strategy, you can see this one, for example, the ATR 278, 2 candles before is rising, and then in the short entry you can see the high day of the highest point in the day 3 days before, in the candle 3 days before, plus a complement of the ATR, the exit bars after 10 bars, and the profit target. If you see this, you can do a full back test, and you can see here that this strategy is very nice. So if you check here the equity chart, you see how it is. So probably I will stay with this. Let's see another one. This is 125. 125 is good as well. If you check this one and edit strategy here, you can see the Bollinger Bands, right? So probably I would choose these two. Frontex. So I don't like this part that you see that the equity chart is going down. If you see here this one, the equity chart, yeah, I don't like this. You see that it's not earning money in 2-3 years, 1, 2, 3 years. So let's see this one. The first, I don't like it too much. The second one, yes, the one that we choose. The third, neither. This one, yeah, this can be. We need to do more tests. Yeah, this one, yeah, can be. But you see, in some hours you can have 1-2 strategies, but if you wait the whole process, like 5-4 days, you can build 4 or 5 robust strategies for this. So Let's go back to the presentation. Key takeaways. You can sort by profit factor as you saw I did. Then check the equity curve shape, the in sample, out sample. Both should look good, not just in sample. And you choose 3 candidates. That's what I do. Sometimes I even choose 1 or 2 because I don't like the other ones. 1, 2, 3. And then in the next episode, I'm gonna show you how to export this to MetaTrader 5 and run your backtest in MetaTrader 5. And you will see how I check to have the both tests, the one in StrategyQuant and MetaTrader 5 to be aligned. Please subscribe. I hope you like it. And if you do, please give a like. It means a lot to me. If you want to know what test I do, click on the link below and you will have this PDF in your email. Thank you very much. See you in the next episode.